1, 2, 1, 2. 1 million, 2 million, 3 million.
Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future.
Hello, Thomas.
Hello, Yanar.
How are you?
Very good, how are you?
I'm okay. A little tired. You know your camera doesn't work.
Yeah, but I don't know why.
Okay.
Okay, so I need to charge my camera for a few minutes, and then I'm going to turn it on, unfortunately.
Why it's so bad?
Battery died. I forget to put it on charger.
Ah, sneaky bastard.
Mother Tucker, I would say. Okay, so I'll be back in a few minutes.
Okay. Can we have music?
Hello, Guerreiro. How you doing, brother?
Sounds a bit better.
Right, I think everyone should be seeing me now. Just double check. 1 2 1 2. Can you see me?
No, we can't see you.
No. How about now?
Yes.
Yes,
Oh,
we
nice.
see your beautiful face
Very good. Very
and your
good.
beautiful smile.
Amazing. Amazing. Okay, so today we have the almighty CPI, which is going to be quite exciting. The reason for that is because the current CPI is below the Fed's, sorry, it's above the Fed's target rate, but it's below 3%. So it's very close to the Fed's target rate. And if you saw today's analyst forecast, which is about 2.5, 2.6%. So they forecasting a 10% decrease in the current inflation rate from 2.9 to 2.6, 2.5. So even more than 30% or 10%, sorry. And we don't know how much is priced into the market. So I think the current debate among traders and investors is, will CPI be big enough for a 50 basis point rate cut? So if the CPI is significantly lower than the forecast or the previous one, so 2.5, 2.6, I think that's big enough. But if it comes below 2.6, so let's say 2.4, then it gives more reason for the Fed to front load the rate cuts with 50 basis points and not just a 25. But if the CPI comes down to, let's say, 2.7, 2.8, then the Fed is going to cut interest rate with 25 basis point only. So it's not the question isn't that whether the Fed is going to cut or not. The question is by how much, is the size which is relevant. So if the CPI is significantly lower than the forecast or the previous number, so I think for me, 2.5, 2.6 is significantly big enough at the current rate of inflation, then gold should create a new all-time high. But if the CPI is just above the forecast rate, so it doesn't come down to 2.5, then we're going to see volatility, but it's maybe not enough to push gold above the new all-time high. But let's have a look on the markets and see what we have on the screen. So let me just kill the music first. And if you have any questions, feel free to ask. Andre is here. His friend Guerreiro is here. Okay. Do you want to come to the Zoom, Guerreiro? Because I know you're friend with Andre. So any professional help is appreciated, because we don't know whether to buy or sell. Well, I'm front loading with a buy, but only with a small position size. So I'm not doing anything crazy, only one standard lot. It's running down minus 47 pips, but it's only £300. So I'm not going crazy on CPI day. There's no way. And let me just send the invite link. Can someone just turn down a little bit the stream, because I can hear the echo. Oh, got you. Okay, let me send the Zoom link to a few people. Andre, do you want to send the link to Guerreiro? Check your WhatsApp, because we need every help today. Every help. So let's see how many. 326 people watching. If you can hit the like button below the video, I would really appreciate, because I'm going to go through a top-down analysis to see what's happening with gold today. So starting with the technicalities, because we already covered most of the parts of the fundamentals and macro trading, I'm going to look at the technicals right now. So you can see that gold is hovering just below the previous all-time high. So the last all-time high was hit on 20th of August at around 2 p.m. Central European time, and since that it retested about almost 2, 4, 5, 6, 7 times. And it couldn't break it through because we had very much mixed data over the past, month and a half or month. And that's why gold couldn't push above the previous all-time high, which was created on 20th of August. So is it going to create a new all-time high today? As said before, we need to see a significantly lower inflation today. So CPI is today, and if you have a look on the forecast, and now we're moving down to the macroeconomics, to the fundamentals, if we want to see gold to create a new all-time high, we want to see CPI, headline CPI, to come down below 2.5, 2.6%. 2.3, 2.4 would be enough to push gold above the all-time high. The forecast is 2.5, which is quite significantly lower than the previous one. It's a really optimistic forecast, but if it can hit 2.5, I think that's when we're going to see a new all-time high. Not sure for how long, but for new all-time high, this would be enough. Because the Fed, there's no question they're going to cut interest rate, but the question is by how much, 25 or 50? 50 basis point if we see a significantly lower inflation today. 2.5, I'm happy with that, but hey, who am I to decide? The market is going to decide about it. On the other hand, core CPI is said to be unchanged. It's forecasted to be unchanged, which is a problem because it excludes food and energy, and two most volatile items in the basket of goods and services. And if you see or saw the oil prices, which came down in the last couple of weeks, we have good chances that we are going to see a much lower CPI today. So let me just read the comments. There's no proper structure. We'll move up, down, or vice versa. We don't know, brother. So I'm trying to do my best. From the technical perspective, is still holding the nice, beautiful, bullish market structure just below the previous all-time high. So it failed to break through the 25.30 price level. Is it going to break through today? Well, only and only if I'm going to see a significantly, and I'm typing out now, significantly lower CPI. It has to be below 2.4, 2.5%. That's when we're going to see a new all-time high. Any questions in the meantime?
No.
And gold will come down if we see a significantly higher CPI. So exactly the opposite. If it doesn't change too much, so if it stays around 2.9%, or if it doesn't change, then we are in, gold is in a shizzle, because then it will drop back down to 24.80 price level. So this is, well, I'm going to keep it real. 2,500, that should be enough. That's wide enough range. We're talking about 200 pips. Yeah, that's my view for today. I'm holding the cautiously bullish bias, and hence you saw that I entered into a long position, but bear in mind I'm not risking too much, and I already have a buffer of 188 pips from the previous positions that you can see running. It was only opened yesterday, the two long positions. Good morning, everyone. Welcome, welcome. So as I said, the question is, how big or small is the CPI going to be? Because that is going to determine whether the Fed to cut interest rate by 50 or 25 basis points. Do you guys want music?
Please.
Yeah.
Okay, I'm going to put something really calm. Or some German trash techno. What do you think about today? What is your first feeling? Is gold going to create a new all-time high or not?
What do you mean, those?
Well, in the past, we've talked about lines of resistance, and I'm looking like 25.25 is a real hard resistance line.
Yeah, gold has been ranging between just below 2500 and 2530, so it's good 250 300 pip range.
Thomas, your camera stopped working.
Yeah, I had to put it back on charger because, you know, that 5 minute wasn't enough. That's exactly what my wife used to say.
Okay.
Just be grateful you don't have to go to a full-on cord.
Say it again, sorry.
I said, you're a man, so be grateful you don't have to go to a full-on cord.
So if you look at the chart now, let me show you how many times we traded CPI. Not all of them were success, but not all of them were easy to trade. So this chart goes back for 3 years. This is how many CPIs I live traded with you guys, and I'm trading CPI for a long time. Sometimes it's not easy to trade. I think the last 3 years was the easiest when all the central banks in the world started to raise interest rate, and it was easy to see which direction the monetary policy is going. We had some very, very good opportunities and we took most of it. But since we are just on the brink of a monetary policy change, things will become tougher and tougher, especially if we have mixed data. That's the worst, because the Fed has been continuously saying that they need sufficient and good data to make sure to, you know, not to cut interest rate too soon or too fast. But amid the difficulties of mixed data, even the Fed, I'm not blaming them, they have a tough job to do, because if they cut interest rate too early, then they're risking overheating the economy. But if they cut it too late, then they're going to push the economy into a recession. So this is why today's inflation data is crucial. If we see a low enough data, so let me just show you, if we see a low enough data, so below 2.5%, gold most likely will create a new all-time high. And the reason why I'm saying that is because a low enough inflation data will give the green light for the Fed to cut interest rate by 50 basis points. So the question is not whether the Fed is going to cut interest rate or not. The question is by how much. Gold is dropping, gold is falling. Yes, absolutely. So it just bounced off from this resistance level you can see on the chart, which was 25 to 27. Of course, there's a strong resistance. So if you see, for weeks now, gold has been unable to break this resistance level through. Today could be the day, but we need to see a significantly lower inflation data. We have 8 minutes to go. What I'm going to do
People forecast EU gonna cut the 60 pip tomorrow.
60 pips, 60 basis points.
Yes.
Wow. There's a lot of front loading.
Tamás, I have a question.
Yes, Gergő?
What is your opinion on the VTI oil?
I don't trade oil because that's one of the most manipulated assets in the whole world. Have you heard about OPEC?
Yes, yes.
So OPEC, they meet in Vienna every quarter and they're discussing about, how much supply should they release to the market. They can close the tap, they can open the tap, and they can manipulate the price as much as they want, depending on the demand, depending on the reserves.
Yes, I know that. The oil is at near 3-year low. So I think we have to see a correction in upside, then continuing in the downside, I
But
guess.
how do you justify this correction?
They have to cut the supplies, no?
Why?
Because there is an oversupply on the market.
Yeah, and why do they need to cut? What if they want to oversupply the market deliberately?
They want to stabilize the price, no? Because the price is fueling the world economic, no?
That's the problem. I mean, this could be the reason why there's an oversupply of oil, because there's a presidential election coming up in 2 months or 1.5 months. So
Yes.
there could be a big manipulation because the current president, or used to be president, could very well say that, oh, they brought down the oil price because their economic policy was good. So it's all about politics at this time. So, but the problem is we don't know what they're talking about in Vienna, what they're talking about at the round table. So this is why I don't trade oil, because it's heavily manipulated.
For mute.
Hello, Thomas. How are you doing today?
Hello, Ayad. Very good. How are you?
Great, great. So you were saying that the oil is highly manipulated. Isn't gold also manipulated? Because I have seen so many articles talking about that gold is the highest manipulated asset. So is that true?
I firmly believe it's oil, because oil is one of the #1 monopoly and cartel, not monopoly, in the whole world. They actually openly fixating the oil price by managing the supply.
Yeah, true, very true.
But with gold, it's not that easy, because they can't just mine more gold or suddenly not find any more gold. And you can see my lovely face now.
Negative. Maybe.
Yeah, you can. Any trades on US 30 or NAS?
It's
No,
cloudy.
not this time. What cloudy?
Your face, your camera.
Oh, because they're shitty. There you go.
Yes. Now we see you again.
Okay, 490 people watching. We have 3 minutes left. Please hit the like button to enjoy the continuation of the stream. So as you can see on the screen, I added another small one lot position. Price came a little bit lower. This is high risk, so I'm not suggesting to anyone to follow me, because this is my personal view, my personal opinion. If the drop in oil prices low enough, they can ignite a massive decrease in inflation on the CPI data today. So this is why I'm speculating on lower CPI today. And even if you see the forecast, the analyst forecast is already 2.5% versus 2.9, which is very, very close to the Fed target rate. So if the CPI is low enough today, then we're going to see a spike in gold prices because then the Fed has the green light to raise interest rate by 50 basis points. Ladies and gentlemen, we have 1 minute left, so get your credit cards ready and enjoy the show. So this is a high risk trade. I'm long on gold, but I have enough buffer and I'm using small position sizes, so be careful when you choose your position size. 50 seconds to go.
Full margin.
Full margin Wednesday.
I think the Monday there was forecast 2.6 CPI.
We have 27 seconds to go. We have 10, 9, 8, 7, 6, 5, 4, 3, 2, and 1. And the CPI today, 2.5, hit the stop loss, moving a little bit lower, and now entering into another position. Good. Let's see. Core CPI came a little bit higher. CPI, headline CPI is in line with the forecast, so that's why we see some volatility. So I need to adjust the stop loss a little bit, because it's a little bit too close. Now the question is, the market is definitely debating, is the 2.5% interest rate, inflation rate low enough for the Fed to deliver a 50 basis point rate cut? So now it's completely up to the market. The forecast was perfectly in line with the actual data, or the actual data was in line with the forecast. And I believe, my personal opinion, it's good enough for a 50 basis point rate cut. Because the Fed announced they want to start front loading, which means they want to cut interest rate a little bit higher because they are behind the curve. We had a whiplash of 120 pips. Gonna add one more, a little bit lower. Who's shorting? Who's long?
Long.
I was shorting this morning, but now long.
I booked 100 pips on shorts.
Very good. Okay. Financial Times, Bloomberg already started posting that US inflation falls to 2.5% in August. Now, this 2.5% is actually a 4-year low. 3-year low. Exactly when they started raising interest rates.
Good morning.
Morning, Mike.
I don't think that this data is reinforcing of a 50 basis point cut.
Elaborate.
Right? It looks so everything is pretty much in line with expectations. And if expectations was already pricing in, I don't know, a 60-something% chance of a 50 basis point cut, then I don't think that this data did anything to increase those odds.
If you factor in the commentary from Fed officials about front loading, it might.
Okay, yeah.
I guess you short then?
I'm not in. I'm not in.
Why not?
I was too afraid to front run that, and I guess I have a position, but it's a sell position at 24.95. So kind of waiting for price to come back around to that.
Sell position at 24.95.
Yeah. So I am in. I just didn't get. I didn't take any new position here today.
The only thing what worries me is the 0.3% core CPI. But with the falling oil prices, I think the oil prices, so the current core inflation doesn't reflect on the falling oil prices in the last couple of days. Certainly not.
Yeah.
One position closed out.
It's probably going to take a bounce here.
Where is the... Well, it's well below the daily pivot now. So if I jump back on the chart, that was my original drawing. Somewhere around here. So it's below the daily pivot, above the weekly pivot. So if it bounces back, it should bounce back from here. But it needs to go above the daily pivot for this long position to be valid. If it goes down to the weekly pivot, well, the shizzle, because that's going to close out all my positions.
The weekly pivot's at 98, right? 98, 99.
Yeah. So I would call it 99 because it's definitely going to go a little bit lower.
Yeah.
It's melting. I have a feeling it's going to touch 2500 and then bounce back from here, because now it's too low from this place to bounce back. It's past the daily pivot.
Yeah.
And now it's only 70 pips away from 2500, which is a strong psychological level. And that is pretty much all the data for today. No, I'm going to pull out from these positions. Closing it down. Maybe that one I'm going to leave. That's the 2-lot position. And then if you look on TradingView, there's an interesting price level. So the last push to the upside started exactly right here.
Right, so there might be some aggressive buyers here.
Well, technically speaking, Fibonacci 78.6, you see previous resistance could become support. There's a possibility. I'm still holding my cautiously bullish bias. And so far, let me just have a look on the PNL for today. Not good, not bad.
I think we'll see gold at 24.88 today.
24.88. Wow, that's very low. What makes you think, Tarek? Is it the CPI data or technicals?
The technicals and the CPI. The news came out bearish for gold, no?
It's mixed. So if you look at the headline CPI, for me, it's good enough for a 50 basis point rate cut, which is bullish for gold. But if you look at the core CPI, now that was higher than the previous one. That was higher than the forecast, which is inflationary.
So it's mixed.
Yeah. Usama is asking, can we enter buy now? Not sure. Check your analysis, because today I had only stop loss hits, so it's one of those days. But the next entry point is very close to the weekly pivot, which is going to be 2500. 25.05 currently. Gubby says, check your account. If plenty of zeros, then yes. Yeah, it's a good point. Ask your bank account. Alright, let's see. So gold did come a little bit lower than my initial forecast.
Well, only kind of. You dialed back your initial forecast, but your original forecast might have been more on target.
That was 25.11, so I was targeting, let me just show you on TradingView, I was targeting, expecting a pullback to 25.11, but it came down all the way to 25.04. So there's a 70 pip difference between my forecast and the actual movement, and we don't know if it's the bottom or not.
Yeah.
But I'm very tempted to move with another buy-in. problem is falling knife, and also we have the weekly pivot at 2500. So I think it's inevitable that price is going to test 2502, or that area is just about 2500. I'm going to wait a little bit more. It seems like Angelo managed to catch that 140 pips. It's a nice trade. And his target is 2480. Let's have a look on the 2-year treasury yields.
Okay, you're dropping now again.
Yields pumping on the short end. Okay, I'm officially out for most of the positions. I have one running position that I'm going to close down now. This price is most likely going to test the weekly pivot.
Yeah, and right here we have previous Sunday open as well.
What was the price level for that, Mike?
Previous Sunday open, so that's the open, not this past Sunday, but the Sunday before. 2502.43 is what I have.
And now I'm gonna go in with the long position, placing the stop loss just below 2500. Target, the first one, is obviously the previous highs. Is it going to go above that? I highly doubt it, but we're most likely going to see a retest of 25.26, 25.25, maybe 25.30.
dollar really pumped, obviously.
Yeah, I guess that core inflation is a tad higher than the forecast, so it's only a percentage point, a tenth. But it seems relevant enough. As you can see on the market is definitely wasn't expecting a higher core CPI.
Yeah.
The question is, this is last month's data, and if you look at the oil prices, which are significantly dropped, theoretically speaking, next CPI should be much, much lower. And I'm going to find out what caused the increase in the core CPI. So what I'm going to do, I'm going to go to the Bureau of Labor Statistics. It's shelter again. So it's accommodation, rent. In August, the consumer prices index for all urban consumers rose 2.2%. Season adjusted rose 2.5% in the last 12 months. Index for all items, food and energy increased 0.3% in August. Let me just read the most. Indexes which increased in August include shelter, airline fares, motor vehicle, insurance, education, and apparel. The indices for used cars and trucks, household furnishing and operations, medical cars, Yeah, the index for shelter rose 0.5 percentage point in August and was the main factor in all items increase. So what we saw today in terms of the CPI data, and why core CPI increased more than expected, is because of the shelter.
Hey Thomas, how are you doing?
How you doing, brother? Who's that?
Good, thanks. I just wanted to just get an understanding if my thinking is correct here. Now, like the way that I'd perceive this is long-term bullish on gold. And this is kind of the throes of the end of high interest rates, and so the smart money is seeing that. And so for me, seeing data like this, which doesn't promote like the idea of big rate cuts, but it does for me reinforce the idea that investors are going to be trying to get as much as they can into bonds before those bonds start coming down, hence the spike in like the DXY.
The yields, yeah.
This is merely like a blip in the road for gold. Is that kind of thinking correct, or am I completely off track there?
Yeah, it is correct, and actually someone brought up in the main chat on Discord this kind of thing. Oh, no, actually yesterday on YouTube someone brought up this kind of thinking, or logical reasoning, which is correct. Now the question is that the problem is that we are unable to track the actual inflow of money into government bonds. What we can see is the movement on the yield, so we can derive the possible demand for bonds. So if the yield's going up, price is going down, and vice versa. So it's a logical thinking and very valid, but I can't confirm whether that is happening now or not.
Yeah. And then what's your thinking on the 10-2 uninverting? Is there any significance, or is it just like life goes on kind of thing?
Yes. Have you read the article I sent out in Discord?
Yes, I did. Yeah.
Yeah, I think that's one of the most summaries, which summarizes, the potential effect on different assets, and why is it important.
Thank you.
Julian B, what the fish? He cashed out 110k from FTMO.
Did I see a post from you yesterday saying that someone cashed out for $100,000?
Yeah, it's on Czech Discord, profit and loss.
Yeah, okay. That's amazing. That's amazing.
Yeah, I mean,
Congratulations.
he did big wins before, Julian. I remember he cashed out, 30, 40 odds K before. But then, of course, he had bad periods as well. He lost the funded account, but then he got back again. He's a good trader. He's a good kid. I remember his first big cash out.
Yeah, that's fantastic.
It's life-changing. I mean, cashing out this amount of money after, a long period of losing streak.
Yeah, yeah.
Changes everything. Seems like gold is going to hover just above 2500. What do you think? Is 2500 strong enough to keep up gold prices?
I guess the longer it hovers here, the more people will start thinking they ought to take their profits now, which then becomes a self-fulfilling prophecy of it bouncing here.
Yeah, and I wonder if the narrative going to turn next week like, well, actually 2.5 isn't that bad. Well, the Fed should cut 50 basis point. The Fed should front load the rate cuts. And I think all we need is just a narrative change, which the market does every single day. It's changing more often than my ex-girlfriend's panties.
Yeah, we're popping out of this range a little bit here.
Thomas,
Yes.
didn't same happen with last NFP? Like market panic sold and then recovered, and it's near all-time high now.
Yeah, the 2 months ago NFP, when the panic selling started because of the 114k NFP, all market crashed, all market melted, all prices were dropping, everyone was selling everything they can. A week later, market bounced back exactly where it was before. So these panic sellings do happen, and all we need is just a narrative change. But that more often doesn't come from, a change in data. It's just a change of perception of people. When they look at it, oh shit, core CPI gone up 0.3%, 0.1%. Oh shit, CPI is only 2.5%. But what if you say, well, actually 2.5% is pretty good, close to the Fed target rate. So crisis averted, Fed should cut 50 basis points. So it's all about how the market is going to interpret and digest the data. As always, the glass is half full and half empty. The big debate.
Like even in the last NFP same happened, right?
Yeah, or just when you're going... Sorry, yeah.
I was saying like this last NFP when the revision was even lower and the current was higher.
Or like when you're going to the club and, by 3, 4 a.m., all the good girls, all the nice girls are gone. And you look at the fatty one. Well, it's not too bad, Why not? Roll up the sleeves and just do the job.
Thomas, can I ask you a question?
I like goals.
No, it's not. It's not about that. So we don't have any other major events this week, no? Other than less continuing jobless claims.
We have counting jobless claims. I don't think we have anything else. And next week is Fed interest rate decision, isn't it?
The 18th, yes, that's going to be certainly the markets will have a lot of reaction to that, regardless of what the news is. right? Because no change would be unexpected. And if they give a basis point, well, there's some people that have priced in, I mean, if they give 25 basis points, there's some people who have priced in 50 basis points to their model, so they'll have to readjust. If it's 50 basis points, the people who have priced in 25 basis points will have to readjust.
Interesting times, isn't it?
Yeah, yeah.
How long is a piece of string? Okay, I just added another long position, so I'm running with 3 long positions altogether. I think if price can stay above 2500, most likely we will see a retest of 25.23. Let's keep it reasonable.
With no other major events, I think it will go to 2514, then it will go down 2500. That's what I'm looking at.
All right.
I guess gold is going to stay in this range, but you know, 2530 to 2470 until the 18th, most likely.
It could be, unless the market is changing the narrative.
Yeah.
Great, Thomas. It appears going back to 25.25. I bloody hope so, because that would ease some of the pain I'm experiencing because of this drop. 150 pip drop, not too bad, but still. That's the worst, is when you have to watch the market because you have an open position.
Yeah, the worst is when you set a price alert and it goes off at 3:30 in the morning, but you got to take care of it.
Yeah. It's like you have a baby. Nah, it's definitely going to stuck in this range. Let me show you something. Price of gold is currently in between the daily and the weekly pivot, so most likely it's going to range between 25.11 for a while, and then either we're going to see, well, most likely we're going to see a retest of the previous high, and that will be either enough liquidity for gold sell-off continuation, or it's going to continue to range within this bigger range. CPI was mixed because core inflation came a little bit higher due to the increase in shelter and housing. The headline CPI did came out as forecasted, which I think it's good enough for the Fed to front load 50 basis point. If they weren't saying the front loading probability, it would not be enough for gold to just, miraculously, jump. But because they hinted a possibility of front loading, and front loading is usually cutting more than they intended to go ahead of the curve, and that is the reason why I'm still cautiously bullish. All right, perfect. If it retests 25.23, I'm all good. $25.11, okay, 54 pips, 40 pips and 21 pips profit. I'm new to the channel. Are you always live? I trade alone today and seen this on my homepage and decided to click and found this good community. Yes, if there is data, I usually will live trade it. You're welcome to join anytime. So right now, gold is testing the pivot, the daily pivot. And it's going to bounce in between. So anyway, guys, CPI wasn't as expected. Congratulations for those who caught the sell. Very, very nice. Tomorrow is going to be continuing jobless claims and initial jobless claims. So we are going to light trade it. Also, we have PPI. That's very good. Producer Price Index, which is a leading inflation indicator, not lagging. So we are going to light trade it, but for now, we did everything that was possible for today. CPI light traded. Now it's the market to replenish the loss or not. Anyway, I wish everyone a good trading day and see you all tomorrow.
Morning brief, yes.
We'll send out the message, yeah.
Okay.
All right.
Thank you. Have a nice evening.
Bye.
Bye.
Okay, bye.
Later, Thomas.
Bye bye, Dubai.